Another way to help you identify the market trend is to use trend lines or trend channels. Now, they can be a little bit more difficult to pick out, but by using a couple of fairly simple guidelines, you will quickly grow used to identifying them on the market. So a trend line is basically just following either the highs or the lows of a market. And what we're looking for are at least two significant swings. Really, two significant swings is what starts to help you identify the potential trend channel. So here we have a high, and then we have another high. You can see they're fairly significant. We get a nice strong move away. We press back up, we get a nice strong move away. Personally, I tend to focus on the candle close and open price rather than the high and low price. But what you can do is you can incorporate both. So all we're doing is taking a line and we're striking it through the first swing and the second swing. And then if you wanted to, you could also incorporate highs of those swings like this. And what we're doing is we are then looking for the market to come back and potentially test at the trend line. If we see the rejections coming in, we can see the market is making the high, lower high, lower high. We're reacting at that trend line and we're selling off. We're coming back up, we're reacting at the trend line and we're selling off. And then we start to break up above. So this is now potentially our sign that the market is starting to move out of this downtrending movement and either moving into some sort of ranging price action or a upward trend, a bullish trend. Now with this one, I'm just going to get rid of this line right here. We can also turn it into a channel. If we take significant lows, one, you could even say this one, but really this one, which is lining up with the upper band of this trend channel. We come down, we bounce again very strongly. Again, we're looking at the close and the opens of the candles. The market comes down, it tests at the sloping support level and it bounces up into sloping resistance. This is the trend channel. So again, let's see if we can identify another one. Let's make this a little bit smaller. Okay, so very, very easy to identify strong swings. One, bounces up, comes back down, bounces up once again. We're taking our drawing tool and we are adding it to the swings. So the open, the close and the open of the candles. And as I've mentioned, you can also incorporate the low prices also, if you want to. And then you could say this is a bit of a zone of sloping support. What we can see is the market is making that low, it's making a higher low, it then presses up, comes back down, tests, makes the higher low, and then bounces again. And what it's doing is it's basically showing you the areas the market should be respecting if it's continuing to make that upward movement, upward trending movement. Now, what you can actually see here for a potential trend channel is if we take the upper swing here and the second one here and we strike through, the market actually comes up and breaks up above this level and then starts using it as support. So potentially we're moving out of this trend channel. But then we break back down again, we start testing 3 times and then we come back down. Again, we're testing, we're pressing back up. If you can actually extend this, we're testing it once again. And there's no real way to know how long a trend line or a trend channel is going to last, but it's a good way to help you spot trending movements on markets. All you're doing is looking for 2 significant swings, you then strike your line, 2 significant swings, strike your line, and if the market starts reacting to those levels, you know you've potentially got a trend line or a trend channel.